Welcome to the day's top cryptocurrency news videos in review, where we summarize the day's critical financial news to save you time and keep your finances informed. Today, we're tackling whether the economy is indeed on the brink of a recession and what that means for Bitcoin and other cryptocurrencies.
Stay tuned as we break down alarming reports about significant downturns in markets and crucial predictions from top crypto analysts.
It's crucial to be armed with knowledge as we navigate these turbulent financial waters together. First, Crypto Banter warns that the recession is officially here, shaking the crypto world. Next, CryptosRUs dives into whether Bitcoin can withstand the recessionary pressures. Altcoin Daily discusses the potential historic crash in crypto, urging holders to review their positions. Benjamin Cowen elaborates on the implications of the Sahm rule signaling recession. BitBoy explores the ramifications of a recent CFTC subpoena on certain cryptocurrencies. CryptoCasey examines how the upcoming U.S. elections might influence Bitcoin's price. Lark Davis questions if the Federal Reserve's actions have indeed managed the impossible, softening inflation. Lastly, the Moon reassures viewers why owning Bitcoin could lead to massive future gains. Welcome to Crypto Banter. Today we're diving into a bold claim. The recession starts today. Yes, you heard it right. Join us as we navigate this turbulent sea of economic chaos.
It's a dramatic situation. Ran Neuner, a trusted voice in crypto, is bringing us insights from the market meltdown. He's known for his direct approach and keen analysis.
So what's the heart of this chaotic storm, according to Ran?
The core thesis is that fears surrounding a global recession are causing significant downturns in major indices and cryptocurrencies. With almost $3 trillion wiped from the Nasdaq, the situation is dire.
What's happening in the markets that made Ran jump on a Saturday stream?
A shocking $2.9 trillion just vanished from major indices. The Nasdaq even fell below its upward trend line, a signal of serious turbulence.
And the biggest names in tech.
Nvidia has plummeted by 26%. Intel, down 45%. We're witnessing historic dips here.
What's the mood like among investors?
The Fear and Greed Index has dipped to 27, indicating that panic is setting in. The VIX, gauging market volatility, has also doubled. Definitely not a comforting sign.
What does Ran predict for the future?
The Fed is expected to hasten cuts. 3 to 4 rate cuts this year could follow. There's a potential recovery on the other side of this storm, though we'll have to weather some pain first.
To wrap things up, what's the takeaway?
Market turmoil is palpable, and while a recession may seem imminent, this could be a precursor to recovery. Stay alert, strategize, and remember, buying during chaos might lead to future gains.
Welcome back to CryptosRUs. Today's vital topic: are we really in a recession? A data-packed dive into the latest market shifts that are shaking Bitcoin holders to their cores.
That's right. George is tracking an economic storm that may be brewing, and he's got the numbers to back it up. Let's get straight to the facts.
So what's the crux of George's discussion? Is Bitcoin sailing into turbulent seas?
Yes, the core thesis indicates that various economic indicators, particularly in the job market, signal a potential recession that could continue to impact Bitcoin prices.
Jumping into the job market, what's that latest scoop?
The July job report revealed just 114,000 jobs added, well below the expected 185,000. Plus, the unemployment rate increased to 4.3%, igniting fears.
What about those recession indicators?
Using the Sahm rule, which tracks unemployment rates, shows we might be in recession territory. Historically, this measurement has been spot on every time.
How is the market reacting to all this news?
Bitcoin saw a shocking drop of nearly 8%. And it's not just crypto, big tech is losing too. Intel's drop was its worst in 50 years, losing 26%.
Looking ahead, what predictions does George make about the market?
He anticipates that a potential rate cut at the upcoming Federal Open Market Committee meeting could provide much-needed stability.
And what about the long-term outlook?
There's hope for Bitcoin to potentially hit 6 figures by the end of the year, especially if positive sentiment can be reignited.
To wrap things up, what are the crucial takeaways?
The situation is tense, but George emphasizes the need for caution and the certainty that Bitcoin can rebound. Staying engaged and informed is key.
Any last thoughts on what investors should focus on?
Absolutely. Keeping a close eye on macroeconomic indicators and remaining steadfast in investment strategies could mean the difference in weathering this economic storm.
Ahoy, crypto enthusiasts. Welcome back to Altcoin Daily. Today, we're diving into the choppy waters of the crypto market and discussing if we are witnessing the biggest crash in history.
That's right, with over $2.9 trillion wiped from stocks and fears of a global recession in the air, let's uncover the implications for cryptocurrency and Bitcoin holders.
So what's the main thesis? What's really at stake for Bitcoin and the broader crypto market?
The core thesis emphasizes that as traditional markets falter, Bitcoin's resilience is being tested. Investors are speculating whether this is the beginning of a major downturn or simply a blip on the radar.
All right, let's break down those key points, starting with the market overview.
The market has seen a staggering loss of over $2.9 trillion in stocks. This comes after 10 consecutive quarters of the Federal Reserve tightening their grip on monetary policy.
Now, what about those recession warnings?
Economists suggest we could be moving into a recession as early as the fourth quarter, with central banks around the world already cutting interest rates in an attempt to bolster the economy.
The signs of economic stress are showing in consumer behavior too. What's the scoop there?
Absolutely. Fast food giants like McDonald's reported their first drop in sales since 2020, indicating that inflation is making folks rethink their burger cravings. Plus, the auto industry is brimming with excess inventory, which could lead to further price declines.
It sounds like there's still optimism in the Bitcoin market.
Indeed. For the first time, Morgan Stanley is allowing its wealthy clients to invest in Bitcoin ETFs, indicating sustained institutional demand. That's a significant move in this volatile market.
Let's pull out the crystal ball. What are the predictions for Bitcoin and the market?
Buckle up. Expect volatility to persist until the Federal Reserve's next meeting. Market analysts are watching closely, as further rate cuts could play a pivotal role in Bitcoin's performance.
To wrap things up, what should crypto holders be thinking right now?
Crypto holders must stay informed and be prepared for potential market upheaval as the economic landscape continues to evolve. The future remains uncertain, but one thing is for sure: stay vigilant.
Welcome back to the Macroverse. Today we're navigating the uncharted waters of the Sahm recession indicator, which has just flashed a warning signal. If this doesn't make you grab your compass, I don't know what will.
Absolutely. Benjamin Cowen brings a wealth of experience to the table, breaking down complex economic concepts with ease. Let's dive right into what the Sahm rule is signaling.
So what's the core message of today's discussion?
The thesis is clear. The Sahm rule has triggered, signaling a possible recession as it tracks rising unemployment rates. With the latest metrics, Cowen emphasizes caution.
Let's break down the Sahm rule. What do we need to know?
It's based on a simple principle. If the 3-month moving average of unemployment rises by 0.5 percentage points above its low in the past year, it signals a recession. Pretty significant.
And what's the current unemployment situation?
As of July 2024, the unemployment rate stands at 4.3%. With that 3-month average at 4.13%, we're just above that warning threshold.
What can history tell us about these signals?
Historically, the results have been varied. Some triggers have led to significant downturns, while others have been milder, like the 1990 recession, which only saw small declines.
What about the labor market? Is it all doom and gloom?
There's a risk of rising layoffs and job openings dropping. The recent data shows hiring rates haven't bounced back to pre-pandemic levels, which is concerning.
So what does Cowen predict regarding future recessions?
He suggests that a recession is definitely on the horizon, but its severity remains uncertain. It's important for investors to brace for unpredictable market reactions.
Any thoughts on what the Fed might do next?
Rate cuts could happen sooner rather than later, but timing and actual effects are still very much in the air. Keeping an eye on that will be key.
Wrapping it up, what's our takeaway?
The Sahm rule is an important indicator to watch as it hints at a potential recession. Cowen emphasizes preparation and a balanced portfolio to weather these uncertain times. Don't let fear drive your decisions.
Ahoy there, welcome to BitBoy's show. Today's thrilling topic, the perplexing subpoena affecting the crypto world. Hoisting the sails with us is the insightful Kai, our Duchess of DeFi.
Thanks for having me. Buckle up as we delve into the intricate details behind the CFTC's recent actions and what they mean for our beloved cryptocurrencies.
What's the crux of today's discussion, Kai? What do we need to know?
The central thesis is about the CFTC's subpoena regarding suspected fraudulent activities surrounding certain cryptocurrencies, including our favorite, Bitcoin. This raises urgent questions about the regulatory landscape in crypto.
Let's break down the key takeaways, starting with the subpoena details.
The CFTC issued a subpoena concerning 15 different coins, with allegations highlighting potential fraudulent activities, which is a serious red flag for the crypto community.
And how does Bitcoin fit into this picture?
Bitcoin is one of the highlights in the subpoena. Interestingly, control over Bitcoin wasn't established until after the alleged activities took place, adding an unexpected twist to the situation.
What's happening in the broader market?
There's evident distress, with UPS reporting some of their worst numbers since 2008. And while they say we might be looking at interest cuts, it seems the economy is in choppy waters.
Looking ahead, what predictions come to mind?
Well, the fallout from this subpoena could reshape the crypto landscape significantly, leading to stricter regulations that may stifle innovation. The industry must prepare for potential turbulence.
What are the final thoughts we can leave our viewers with?
It's essential for everyone in the crypto space to remain vigilant as these developments unfold. The CFTC's actions may signal a major shift, and staying informed is key to navigating these unpredictable waters.
Welcome to the channel. Today, we're navigating the waters of cryptocurrency predictions as we dive into Bitcoin's price dynamics and the upcoming US elections.
That's right. Crypto Casey is at the helm today, providing insights on your burning questions regarding Bitcoin's price movements and their potential ties to political outcomes. Let's get the engines running.
So, what's the main thesis today? How are elections shaping Bitcoin's fate?
The core thesis reveals that Bitcoin's price could surge with a Trump election victory, while government actions like dumping Bitcoin may lead to short-term dips. It's all about political currents affecting crypto.
Let's break down the first key point. How does Trump's candidacy compare to Harris's?
With predictive markets showing Trump at a 55% lead, the race is shaping up to be a nail-biter. Media influence could tip the scales, making it a staggering battleground.
Next, what impact do past government actions have on Bitcoin?
When Germany sold their Bitcoin, we saw a dip immediately. Government moves can lead to short-term price fluctuations, echoing through the crypto waters.
And what about altcoin season? When is that going to happen?
A wild guess here suggests November could be the kickoff for altcoin season, right after the US election. Any certainty on the election results will serve as a catalyst for market actions.
Now, what predictions are on the table?
If Trump wins, the anticipation is clear. Bitcoin could skyrocket. This market sentiment will likely ripple through crypto assets.
And what about the market in the meantime?
Expect typical summer slowdowns. It's the calm before the potential storm come the election.
To wrap it all up, what's the key takeaway?
Political outcomes hold a tight grip on Bitcoin trends. Following these shifts will be crucial, folks. Make sure to like, subscribe, and share your thoughts in the comments.
We can't stress this enough. Keep learning and engaging.
Absolutely. Dive into crypto discussions, and don't forget to stay updated on trends and predictions. It's all about steering your own ship in these waters.
Welcome aboard. Let's dive right in. Today we're questioning, has the Fed truly pulled off the impossible with its recent economic maneuvers?
Exactly. Lark Davis, a renowned authority in crypto and economic trends, provides insights that could reshape how we see the Fed's actions. This might just be the pivotal moment for investors.
So what's the core thesis of Lark's discussion?
The main takeaway is that the Fed may have successfully brought down inflation while keeping the economy afloat, hinting at a soft landing, something many thought impossible.
All right, let's break down some key points, starting with inflation. What do we know?
Core inflation is currently at 3.3%, way down from a peak of 9.1% in June 2022. So things are definitely looking better.
And how's the economy faring?
The US GDP grew at an annualized rate of 2.8% in Q2, which was higher than everyone expected.
What about the yield curve? What's the latest?
The yield curve is just 14 basis points away from returning to normal levels. This is significant because it signals we might not be in for a recession right away.
And how's the job market looking?
Unfortunately, unemployment claims are rising, up by 14,000, indicating potential heating trouble in the job sector.
Now, let's not forget about Bitcoin's role in all this. What's the scoop?
Bitcoin could see a dip after rate cuts, but with global liquidity at a staggering $94 trillion, it won't stay down for long.
Let's shine a light on some predictions. What do we expect from the Fed?
If inflation keeps dropping, we might see rate cuts soon, which, historically, is bullish but could be risky at the same time.
And what about those recession rumblings we keep hearing?
A recession could still be on the horizon if unemployment keeps rising, putting pressure on the Fed to act more aggressively.
So, what's the key takeaway from all this?
Lark emphasizes that while the Fed may have succeeded, the economic landscape remains unpredictable. Investors must stay prepared for whatever comes next.
Ahoy! Welcome back to the moon. Today, we're tuning in for a discussion on Bitcoin's current stormy seas with Mr. M. It's a Bitcoin roller coaster, folks. Buckle up for some exhilarating insights.
We're diving into the depths of the market today, and it's essential to consider Mr. M's expert analysis. With his experience in trading and market education, he's here to break down the latest on Bitcoin's behavior amidst economic chaos.
So, what's the core message from our discussion today?
The main thesis is this. Even while Bitcoin is experiencing volatility and setbacks, accumulating it now is perceived as a lucrative investment, as we're on the brink of a price surge.
Let's explore those key points. What's the buzz regarding market reactions?
Recent economic data is causing investor jitters, leading to negative reactions. Additionally, Bitcoin's performance often mirrors stock market movements, especially during corrections.
What about the price predictions moving forward?
The discussions suggest a rally as we approach October, following historical patterns where Bitcoin prices recover significantly after corrections.
Interesting. What's the scoop on CME gaps and accumulation?
Right now, the CME gap indicates a potential price drop to around $58,700. It's viewed as an ideal time to scoop more Bitcoin.
How's the sentiment around market participants?
Many retail investors are still holding back. However, there's increased bullishness as institutions make large purchases, boosting overall market confidence.
Let's look ahead. What predictions are floating about?
Expect a consolidation phase now, but a price rally could follow soon. Historically, corrections lead to substantial rebounds.
Any thoughts on institutional involvement?
With firms like MicroStrategy aggressively buying Bitcoin, this could seriously impact market price positively in the long run.
To wrap things up, what are the main takeaways?
We're at a pivotal moment. It's a prime opportunity to invest in Bitcoin for significant gains ahead. Stay informed and keep an eye on those market cycles.
What optimistic outlook can we take from today's discussion?
Despite volatility, the future appears bright for Bitcoin. Investors should remain engaged and seek opportunities in this dynamic market.
In today's reflections, we discuss the disconcerting signals from various economic experts regarding the looming recession and its ominous implications for the cryptocurrency market.
While some believe Bitcoin can rebound from its current state, others emphasize that we might need to brace for significant volatility as conditions continue to evolve.
Our guests presented a range of predictions that reflect the uncertainty of the future, highlighting the importance of informed investment strategies amidst this chaos. Thanks for watching the day's top cryptocurrency news videos in review for August 4th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.